Thank you, Gaia, for handing over the stage. And thank you, Georgina, for the invitation. Good evening to all the participants. Before we explore the special tax regimes available and could be matched with the different visas that Gaia further explained before, it is maybe worth having a look at the Italian principles of taxation. So basically, Italy applies a residence-based system, which means that the treatment of Italian tax residents differs from the one of non-Italian tax residents. While on one hand, Italian tax residents are subject to taxation on their worldwide income, so every income they earn, everywhere they earn from this income from, is subject to Italian taxation. On the contrary, we have non-Italian tax residents, which are resident in a third country jurisdiction, and they are subject to tax in Italy only on the Italian sourced income. So income deriving from Italian sources, which can be, for example, real estate properties situated in Italy, employment activities carried out in Italy, or either investments, for example, in Italian companies. So, as a further principles of taxation in Italy, we have two main ways by which the Italian tax system works, and we have a taxation based on progressive tax rates for the income, which we can define as productive and operative income, such as income deriving from employment, self-employment, business income, or even income deriving from land and buildings situated in Italy or elsewhere, or rather even capital gains deriving from a sale of assets different from, for example, shares. In this respect, and with reference to those income, the taxation applies with progressive tax rates, currently ranging from 23 and up to 43%. On the other hand, financial income is subject to a favorable taxation, which is currently set at 26%. And this applies to, for example, dividends, interest, but also capital gains deriving from the sale of shares and other kinds of income from investments, so financial incomes. So here, the special tax regimes becomes interest because, as you may have understood, Italian tax residents are subject to the highest taxation in comparison to non-Italian tax residents because they're subject to tax on their income, either their source in Italy or elsewhere. So the first of the three regimes that we're going to look at in a few moments, the impatriati regime, targets employers who are coming to Italy to exercise their employment activity. So here the benefits is for Italian sourced income, while non-Italian income remains subject to the ordinary taxation rules. By contrast, either the high net worth individual special tax regime and the pensioners regimes target people that has their main source of wealth and assets and income located outside of Italy. So they provide for benefits concerning foreign sourced income. And we will see in a few minutes how these three regimes work. So Raffaele, if we can move to the next slide, please. We're looking as a first step at the impatriati regime. So here we've seen that the target for this regime is some benefits for employment income sourced in Italy, which means that the activity is carried out in Italy. The tax benefits consist on an exemption equal to the 50% of the employment income or self-employment income that a person derives, up to a maximum of 600,000 euro in a given year. And it works that, if, for example, you earn 400,000 euro in a given year, you can exempt from taxation 200,000 euro and pay the progressive tax rates only with reference to the 50% of your income. If, for example, you move to Italy with minor children, or if you have child while residing in Italy, the benefits are increased because the exemption rises up to 60%. So you're paying taxes only on 40% of your employment or self-employment income. The regime lasts for a maximum of 5 years. It's non-renewable. And basically, it provides for benefits for the workers. As for the requirements to enjoy this special tax regime, we have to look at the Italian tax resident history of the person applying for the regime. So the regime is available for people who have not been a resident in Italy for the 3 years prior the relocation to Italy. And this, let's say, non-tax residence period extends in case the individual is relocating to Italy to work for the very same employer he worked for before relocating to Italy, or even in case the individual was already working in Italy before his actual relocation. So in those cases, the observation period of non-Italian tax resident rise up to 6 years or 7 years. Then the individual choosing to relocate in Italy and enjoying the impatriati regime has to maintain its Italian tax resident for at least 4 years, after the relocation, which means that the regime targets individuals who are looking at establishing significant ties with the Italian territory and staying for long stays, actually. Then another requirement for applying this regime is that the individual has to earn the majority of his employment income from activities carried out in the Italian territory. So regardless of who the employer is, which can be either an Italian employer or rather a foreign employment, the individual has to carry out his activity based in Italy. So in this respect, the regime is quite interesting because it does not provide any restrictions, neither in terms of employer, which can be Italian or non-Italian. You can relocate wherever you want to in the Italian territory. There is no geographical restrictions on the place where you can fix your residence. And you can also relocate to Italy if you're working remotely for a foreign employer. So that's kind of interesting. If we move to the next special tax regime, Raffaele, next slide, please. We're looking at the high net worth individual special tax regime. So this regime targets high net worth individuals, as the name says. So either entrepreneurs, private equity fund managers, and any other individual for which the wealth and income is concentrated and sourced outside of Italy. So here, the individual applying for the regime pays an annual flat tax equal to 300,000 euro per year, which covers basically every kind of income and regardless the amount of income received, on the condition that this income is sourced outside of Italy. So it derives from, for example, real estate properties held outside of Italy, employment activities carried out outside of Italy, foreign investments, so investments in, for example, non-Italian companies. There is only a small exception for capital gains derived by individual in the first 5 years of validity of the regime, but with under certain circumstances, also capital gains may be covered by the regime. The regime further allows the applicants to enjoy some exemptions in terms either of wealth taxes, which are not applied, and those are wealth taxes on financial assets held outside of Italy, real estate properties located outside of Italy, and even crypto assets. There is also an exemption from Italian inheritance and gift tax for assets held outside of Italy. So this is kind of interesting also to benefit intergenerational transfer of wealth. And another benefit concerns the compliance duties, which has to be complied with by individuals relocating under this regime. Under the special tax regime for high net worth individual, you're not required to disclose your foreign assets. So your tax return is very simple, very easy, and you're not required to let the Italian tax authorities know where your assets are located and what your assets outside of Italy are. You can, under the special tax regime for high net worth individuals, you're treated as an ordinary taxpayer in terms of tax residence. So you can even apply for a tax residence certificate, because basically you're subject to a favorable taxation only on non-Italian sourced income, while Italian sourced income deriving from Italian real estate properties or activities carried out in Italy, those are subject to the ordinary taxation. And you're exempt from control foreign countries rules. So income produced by foreign entities, which generally are subject to a low taxation in the jurisdiction of production, are not subject to tax in Italy, but covered by the flat tax due under the regime. As for the main requirements to access the special tax regime, the non-Italian residence history period here is longer, because the Italian tax authorities and the Italian tax rules requires you to not have been an Italian tax resident for 9 out of 10 years prior to your relocation in Italy. So this regime is interesting for people that are completely new, actually, to the Italian tax system. It requires you to acquire your Italian tax resident. You can place your Italian tax residence wherever you want to in Italy, and you do not have to choose any particular cities to be able to enjoy from it. And our suggestion is usually to file an advanced tax ruling with Italian tax authorities, because this not only provides you with certainty regarding the fact that you meet all the requirements to opt for the regime, but also via this ruling you can preliminarily understand how certain items of income are treated under the special tax regime, or even if foreign structures, for example, either involving trusts, family foundation, or rather even holding companies, family office that you might hold outside of Italy, are covered if they are covered by the flat tax due under regime. So still benefit from this favorable taxation. The duration of this regime is much longer in comparison to the impatriati regime, because the regime lasts for a maximum of 15 years, where you are simply paying basically the 300,000 euro per year. And the individual is also free to cease to apply the regime whenever he wants to. So there is no minimum stay requirement. And you can choose to either drop the regime and continue to be an Italian tax resident applying the ordinary rules, or rather you can leave Italy whenever you want to. It is interesting because absolutely it offers the widest range possible of benefits in terms of foreign assets and income. It allows also you to bring with you your family members and apply the very same benefits to all your family by paying reduced flat tax. So for the main applicant, the flat tax due annually is equal to 300,000 euro. But if any family members apply as dependent applicant, they may enjoy the very same benefits by paying only a reduced 50,000 euro flat tax per year. So that is another thing that is quite interesting and convenient. It applies to foreign carried interest, income deriving from cryptocurrencies, and income from exploitation of image rights. So basically, it offers the widest benefits possible. Last but not least, if Raffaele, we can move to the next slide, we'll explore the pensioners regime, which offers very similar benefits in comparison to the high net worth special tax regime. But it allows them, since it targets, let's say, still non-Italian foreign income, it is addressed specifically to pensioners, so people receiving a pension and cease to be active as employees or even self-employees. And it provides for the application of a 7% flat tax on non-Italian sourced income. So regardless of their source, whenever they are sourced outside of Italy, they're subject all to 7% flat tax. And if you remember, the ordinary tax rates ranges from 26% in case of financial income, but up to 43% if we are applying progressive tax rates. The pensioners regime also allow the applicants to be exempt from the foreign assets reporting obligations. So even in this case, the Italian tax authorities do not know to be aware of all your assets and wealth held outside of Italy. And you are also exempt from Italian wealth taxes on financial assets, real estate properties, and crypto assets. So the benefits are quite similar to the high net worth individuals special tax regime. Differently from the previous regime we've seen, the pensioners regime does not provide for specific benefits in terms of inheritance and gift taxes, but it is worth still reminding that the Italian tax system provides some favorable treatments for inheritance and gift tax because it provides for particular allowances up to 1 million in the transfers between parents and children. And also the tax rates in terms of inheritance and gift tax are quite small because the maximum tax rate for Italian inheritance and gift tax is equal to 8%. So quite convenient in comparison to other countries, which applies 40% or 50% taxation in case of intergenerational transfers. The pensioners regime lasts for a maximum of 10 years. It's non-renewable, similar to the previous one. And even in this case, you're free to terminate it as long as you want to. So there is no minimum stay period. Differently from the high net worth special tax regime, the pensioners regime does not allow any particular benefits from family members, which still can apply separately for the pensioners regime if the requirements are met. Of course, as we were mentioning before, the pensioners regime target pensioners, so people retired from work. And the first requirement to be met is the receipt of a pension. Then the second requirement, different from the other regime, is that this regime is applicable to individuals relocating in certain regions of Italy, particularly in the south of Italy, in villages and municipalities with a small population, so less than 30,000 inhabitants. Also, some other municipalities are located in territories and regions that has been interested by seismic events in the past. So with this regime, Italy tried to, let's say, populate areas which are even still less developed, but still very beautiful, absolutely. And why this is interesting, because you can enjoy absolutely similar benefits as are available under the high net worth special tax regime, but without paying 300,000 per year. So your taxation depends on the actual amount of non-Italian source income that you're deriving once relocated to Italy. So here the regime, as we've seen, are quite different from one another. They target different kind of individuals, either employees or rather pensioners, or even people having high and extensive wealth outside of Italy. They can absolutely be matched with the most appropriate visa programs, as we've seen with Gaia. And so the combination of the visa program together with the special tax regime offers significant opportunities for people looking at either relocating in a beautiful country, but also enjoying specific tax treatment not available to the ordinary taxpayer. I'm letting the stage to Raffaele for some final thoughts, and thank you so much.
Yeah. Just to complete and to make a very short recap, as you have seen and listened from Gaia and Silvia, we have several procedures for immigration and different tax regime that could be applied depending on your needs, your situation, and potentially the best option can be choose considering what you want to do in Italy, what are your real needs and your specific situation. Of course, let me confirm that we are here and available to reply to your question. We know that now there is a Q&A session. Feel free to make any question to us And in case also after this webinar, you should have doubts or question, please contact us through Georgina, and we will be happy to reply to your questions. Georgina?